following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 31st terrific Thursday, happy Halloween edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. So let's go look at one of our tools. This is the tool I call We Are What We Believe. Now, those of you not familiar with Anton, he was a Russian physician turned author who was considered to be amongst the greatest writers of short stories. He was born in 1860, and in honor of Anton and it being Halloween, trick-or-treats out there, let me tell you one of his stories, one of my favorite stories. You've heard it before. For those of you that listen in, it's a story about a woman who dreamed she was being chased by a large, ugly, terrifying monster or ghost, whichever you prefer. Everywhere she ran, this ghost would always be right behind her. In an attempt to get away, the woman ran into a canyon that proved to be a cul-de-sac. Uh-oh, she was trapped with her back up against the wall, and the ghost came closer and closer. And when that monster was 10 inches away from her, she cried out, "What horrible thing are you going to do to me?" Of course, the monster, the ghost, looked at her and said, "That's up to you. It's your dream." Question, folks. Have you ever felt as if your back was up against the wall and that monster was chasing you? Something to think about. Well, let's get back to the story. You see, it was at that point that the woman could decide whether or not she wanted to be devoured by the monster, have the monster disappear, or better yet, turn the monster into a prince. It was her dream, and she had the power to determine how it would play out. Each of us, you and I, well, we create monsters from time to time. We view aspects of our lives that are different or unique, perhaps things that we think are wrong with us. And then we spend most of our lives trying to hide those things that I prefer to refer to as qualities. That's right. Your uniqueness is a quality. It's a gift. It makes you special. And last time I looked, that's not the definition of a monster. You know, it's so important to remember that our lives are very much like our dreams. We have control over our thoughts, and therefore we can view our lives in any way that we choose. If our thoughts have created a monster, well, we can choose to turn that into a positive self-image. Each of us, you and I, we have potential that is so incredibly rich. It's like an inner kingdom with infinite resources. Each of us has the ability to set aside any sense of burden, any apprehensions that we have, and we can do it in the click of your fingers, in a heartbeat. That's right. Every tree, every flower, every blade of grass, it's magnificent and magically different. You too are magnificent and magical. I say create the type of self-image that will make you happy. Make the most of your life and get rid of the monsters. Get rid of those ghosts, because we are what we believe. And I believe you are extraordinary. Let's go check out the extraordinary markets out here. Right now, Dow Futures trading down about 12 points, trading out at 15,541. S&P Futures off 3, trading out at 1757. NASDAQ Futures off 18 points right now, trading out at 3374. Russell 2000 down a couple points, trading out at 1104 and a little bit of change. King dollar, that's on the move, up 258 ticks right now, up 25 to almost 26 cents, trading out at $80.09. The euro, bunch of movement there. Of course, our friend the euro, Japanese yen, that we're going to take a look at for sure. Goldilocks back $23. That's down 1 7/10%. Silver off 96 cents right now, trade out at 22.02. Looks like it is testing its up channel. Bottom of its up channel is what I should say. We've got, if we take a peek around the globe, see what we have going on out here over in Asia last night. Well, we didn't do a good job of handing the ball off to them. You had the Nikkei down 175 points, a little over 1%. The Hang Seng off 0.4%, off 98 points. The Shanghai down about 0.9% as well. That was off 20 points. Our call-in number, 877-927-6648. If you give me a call, I'd be happy to take your call, field it, and see what I can do to answer your question. So where should we start? Well, we got to start with the currency pair for sure. We got to start at least with my favorite currency pair, and that's this Euro-Japanese yen. Now, yesterday what we saw was the Euro-Japanese yen get back up towards its swing point high, its most recent swing point high, where it had formed that 1.618 butterfly sell pattern. That butterfly sell pattern did have a bearish engulfing candle on the following session, confirming that. Oftentimes you'll see butterfly patterns, you'll see Gartley's, maybe have another test of that area, and that's exactly what has transpired here. We saw yesterday the Euro-Japanese yen get up to a high of 135.43, resistance 135.50. That's from the swing point from October 22nd, and what we have seen since then is a big sell-off, a big bearish engulfing candle out here. Take a look at this. 1, 2, 3, 4, 5, 6, 7. So far, engulfing 7 sessions out there. That's rather large, folks. In fact, if we see a close today, well below 133.82, it's trading at 133.93 right now. You can tick off another session, maybe an 8th session, maybe a 9th, maybe a 10th session out here. A big bearish engulfing candle that has formed. Now the trading session is not over, and in fact, if we go take a look at the intraday chart out here, you can see that on the intraday, and this is a 30-minute chart. Now, we were taking a look at the currency pairs, this currency pairs, and others. We were looking at these 2 days ago. So this is Thursday. We're looking at it on Tuesday, all the different patterns. Of course, what we showed here on the Euro-Japanese yen was not only did it form the Gartley buy pattern, beautiful Fibonacci numbers. That's the yellow pattern if you're watching our screen here inside the Tiger's Den, or if you're watching us on Tiger TV. And because of the candle formations, because of the wide-ranging bars and being able to break into the 0.618 retracement of that pattern so quickly, what I said was, looks to me like this is forming more of an A to B equals C to F. The ultimate outcome of any Gartley, because that's a D point that it's forming, because a Gartley has to have an A to B equals CD. That's the only requirement. It doesn't have to be a retracement level coming back. It doesn't have to be a 618, 786. Just needs an A to B equals CD. This case here, my suggestion was, this looks like this pattern is going to complete at 135.31. Now, what did it do? It actually got up at the time frame of 11 o'clock yesterday as we were going off the air. The intersession high was 135.29. Not too bad, 135.29 versus 135.31. But it never really gave us the bearish reversal signal out here, and instead made a slightly higher high coming into the time frame of, 4:30 in the afternoon yesterday. And then, boy, that gave us that bearish engulfing candle. Of course, we also saw that price had moved to a little bit higher high and less relative strength. That was a nice little divergent pattern out there as well. Now what we can see here is that we've got a little hammer candle that is forming as we come into this session. Now, this session here is not going to close for 15 minutes, so we're far from calling this a hammer candle. What we can see is that price has moved down into that extreme oversold territory, and some type of bounce or sideways move should occur in order to work that off. What we are seeing here, though, if you take a look at this move down, this little cascade here, that is a bearish sign, most certainly. So any bounce that we get out of here, any bounce in the marketplace that we might get, has to be very, very suspect. All right, now, very close to getting another short signal. But we're not there. Let's see, when is this session here going to end? 9:45. So I need another 30 minutes here before I actually get my signal. But if I do see a close below 1750, 650, yes, I'll be adding to my shorts out there. They are ironed, they're on, and they are ready to wear. Let's go to Victor in Paramus, New Jersey. Victor, thanks for calling. Thanks for holding. How are you this morning?
Good. Before I get to my stock, I was just looking at a chart. It kind of made sense. It's a 250-week chart, high to lows, and we're right at that same thing. If you put that pattern on from like 2000, whatever, to 2000, you know what I mean?
This is the ticker symbol 5, F-I-V-E. Is that what you're referring to?
5 is what I want to look at. But I'm saying if you take 250 weeks from high to lows, we're right at the high again from 2009. You divide 250 weeks,
Okay.
take an angle and do a chart. We're at a cycle right now. We're at a top.
Okay. All right.
Tired. But
so
what do you think of 5? You think that's a gap play? It's going to retest that?
Hold on a minute. So are we looking at 5 or not 5?
Yeah, you look at 5.
Okay. And what is it that tell me what you're doing here with 5?
Goldman Sachs brought it public, so I'm figuring they're probably going to be short in there pretty soon because there's a big gap there in that one day. So it's like a gap play almost.
So I'm going to go back to the daily chart here for FIVE, and you're trying to take a short position in this. Yeah,
because it's a crappy store, so I figure, you know what I mean? Goldman Sachs bought it public, so they're probably dumping all their shares right now.
All right. Well, if we take a look at this thing had a nice little breakout session here. I haven't seen this thing really break down entirely out here, so I'd be somewhat careful on this stock. What you really need to see this thing do, Victor, is to break the swing point from October the 9th at least. You want to see this thing at least break a swing point to the downside, and it hasn't done that. So I would just suggest being a bit careful here, because that was a heck of a trading session. I don't know what occurred on September the 10th out there, but you talk about
it just IPO'd, so it could be lockup or whatever. You know what I mean?
To cause a gap up like that? No. This IPO goes back to July of 2012. I'm just suggesting that this wide-ranging bar, and that's really important. You got to fill in the gap there. So when they take a look at gaps, just make sure that what you are automatically doing is, don't think of gaps as short plays or long plays. What you also want to make sure that you're doing is you want to make sure that you're covering that in, Victor, and coloring that in, because if I do that, this is the widest ranging bar that this equity has had out here. So I'd be careful, all right? 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We'll go back to that FIVE stock chart here just real quickly. I've got the weekly chart up on the screen. As Victor had pointed out, it's an IPO that goes back into the July 2012 timeframe. You can see a nice little rising price channel that this equity is in. And remember, when you're taking a look at a stock chart, whatever it is that you're looking at buying, investing in, long, short, whatever it is, make sure that you always take a look at a level up, a level down. You see, there's a primary trend. There's a secondary trend, and then there's what I call a trading trend. And you really need to have a good grasp on all three of those. And I consider to be the, let's face it like this. Let's look at it like this. If you're a longer-term investor, your primary trend is either going to be your monthly chart or your weekly chart out there. And by longer term, I mean your 401k. And, 70% of the folks that listen in are managing or making trading decisions on their longer-term accounts. And that means you really need to be focused and make your trading decisions off of weekly charts. It also means you're going to have wider stops in there because when you take a look at just the average true range of the last 10 weeks and the size of those candles, it's going to be much different than a daily chart out here. In the case of FIVE, one of the things that we can most certainly assess is, here is on the weekly chart that wide-ranging bar with volume, with acceleration to the upside. That took place on September 13th. And even though that high has been tested and it's been tested on lighter volume, that's quite a nice bar that you see there on the trading session of October the week of October the 18th out here. And so far, thus far, all we've seen is a couple of bars with inside here. So I think that this thing could always break down to the bottom of the rising price channel, make it down into the $39 or $40 area out there. But boy, these bars here, they just say, be really cautious out there. So I would, if it were me, I would be looking to short something that was weaker, not something that had so much strength, at least at this stage, in the way that the stock chart is behaving. Have a question in the den from Pete D to take a look at the UUP. That's the ETF for the U.S. dollar index. If we're going to do that, well, we've got to start out by taking a look at the currency pairs. That means we've got to take a look at the Queen out here. And this is the, we just talked about weekly chart, so let's go take a look at the weekly chart of the euro out here. And you can see that is that descending price channel that it is in. I still have, there still is the possibility of this going up and testing the trend line. Now, the black lines are the downtrend channel lines out here, and you can see that this is proved to be formidable resistance. Now, the week's not over, but come tomorrow afternoon, if you see a close, and that close inside the euro is below 1.3682 out there, you will have gotten a bearish engulfing candle at the top of a long-term descending price channel out here. That would actually put strength into the UUP trade. Now, what you've also got to take a look at is it's got a pretty well-defined rising price channel out here. Maybe I'll spend some more time and just make sure that that is, in fact, the case out here. But as we take a look at this, you know, it's going to have to break this this rising price channel, this intermediate term time period rising price channel, in order to confirm that the UUP, the U.S. dollar index, really wants to go higher. But let's go take a look at the UUP at the moment, see what that closed out its session at. Looks like $21.48. I am gathering, I don't know, Peak D, if you are long, if you're short here. But what I would be doing really is paying attention to, I would say it would be easier to trade the euro, because if you're going to trade the UUP, you've got to deal with the entire basket of currencies. That means you've got to get your head straight as to what's going on with the Great British Pound. You've got to get your head straight with regard to what's going on with the U.S. dollar, Japanese yen, and certainly you've got the Canadian dollar, the Swiss krona, what else is out there? There's one other. So what I would do is I would say you're better off just focusing in on one currency pair. I would say your better trade is on, and I forget the ETF for it, but there's one that is for the euro specific with regard to the euro U.S. dollar, and that is the one that I would be taking a look at. The FXE is one that'd be great. I would just try to keep it simpler out here. And at this stage, if you're looking to go short the euro, I would say, okay, you're up. You know that if you see it close above on the euro 138.31 out here, it's going to run a bit higher. It's going to run into the trend line that is out there. That's coming off of. This is coming all the way back to 2008, folks out there. So I just think that is the easier trade than trying to trade something that is a total basket of currencies, because I don't want anybody to be a basket case out there. Let's see, before the bell, after the bell last night, out with earnings as far as big movers. Starbucks, they're down about 2.5% right now, down $2 and change. Visa's off $7, that's off 3.5%. Facebook down about a little over 3.5%, off $1.78. ExxonMobil up 52 cents right now, up about 0.6%. Let's see, the futures here, Dow is down 18. When we get back, we're going to go see how this market is going to open. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the races. We got the Dow down 19 points, trade out at 15,599. S&P off a point, trading at 1762. Composite down about 9 points, trading at 39.21. Russell 2000 off 52 cents. Boy, the Russell 2000, that got smoked yesterday. Apple down $3. Microsoft down 2 ticks. Google off $1.47. Cisco down 17 ticks. Leading the charge to the upside. Release those hounds of Expedia. EXPE up about 17% this morning. As we can see, it's trading inside of this gap out here, doing it with some decent volume, 2 million shares in 4 minutes of trading out here. Inside the gap, where is Expedia headed to? I don't know. You know, when something is inside a gap this large, then folks, and this is a huge gap, my goodness. Take a look at the July 25th trading session, closed out at $65 even. Next trading session, the close was $47.20 with some massive volume, 28 million shares out here. So, is it going to go ahead and make it up to the top of the gap? Perhaps it will. That would be the low of about 63.72. But when you're inside this zone here, remember we were talking with Victor earlier. If you take a look at the wide range, just to let me get rid of these. This is the importance here. We're all visual. I think one of the things that we have to now, we mostly learn visually out there. And when we take a look at the stock charts and you take a look at candlesticks like this, the gap just simply seems to, you've got to really be creative. You've got to really have studied stock charts to really understand the power of that gap. And I say the easiest thing to do is just simply go fill in those candles, because if we take a look at where this equity closed at, I'll go ahead and I'll turn this color red out here. This is really the candle session that you are looking at very next candle session. That is the candle session for Expedia. You don't get too much more. That's probably not very good vernacular out there, but you don't get much more bearish with regard to a candlestick as far as a wide-ranging bar than that. And if you saw that on your screen versus the gap, which one is the more scary ghost out there? I'd have to say when you color it in, it truly gives you the perspective of what it is that you are looking at. And likewise, we can go ahead and fill in today's session, right? We've got a gap up today, and you tell me which one, whether you would get all fat and happy about this candle formation here. We'll just turn that into a green one out there. And so even though you've got a nice gap up, this puts it in perspective with regard, at least in my opinion, it puts it in perspective. Looks like I didn't draw it exactly the right size, but let's try to see if I can stretch this. There we go. So that's probably the size of the candle out there. You tell me which one you would want to go ahead and bank on or what have you. I say you got to be careful with something like that. That's really how you take advantage of being visual, I think, when it comes to gaps and it comes to stock trading out here. And then even also to the upside, we've got Perrigo, PRGO is the ticker symbol. They're up almost 7% this morning, up $8 and change. You've got Carbo Ceramics. Oh, there's one that's up 21%. CRR is the ticker symbol. Let's go check out CRR, see what it is doing here. I believe this is a little bit of a psycho stock as well. It's had gaps up, gaps down. The gaps all around. Let me just start with a fresh chart out here. There we go. So you take a look at Carbo Ceramics, see what the news is behind this. Maybe they're out with earnings here. They did announce earnings, revenues of $201 million versus $151. So nice growth there. Net income $30 million versus $23.9. Gapping up this morning. But this thing is also just coming into a breakdown session, and it's a major breakdown session here on this equity. So this is the daily chart that we're looking at. Let me just fill up the screen for you a little bit easier. We'll put the line across where it's going to trade into, and this is where it last really broke down. It's not the only time that it broke down, but on Carbo Ceramics had a big, huge gap down, volume-wise, 5.7 million shares to the downside on January 26th out there. So far, the volume here to the upside, not too shabby, but only 285,000 shares in the first 8 minutes of trading. So we'll see if this thing finds its resistance area at the price level somewhere around 128.98 out there. That is on Carbo Ceramics. We got Time Warner Cable, TWC. They're up about 3% here this morning. You've got Silver Spring Networks, SSNI. That's up 17%. Avis Budget Group, CAR, is their ticker symbol. They're up nearly 10%. To the downside, we've got Atlas Air Worldwide, AAWW. That is down about 17%. Protolabs, PRLB, they're down about 9%. Chart Industries off 6%. Visa, they are taking a swipe this morning to the downside, down 3% off $6 and change. Weight Watchers shedding a few pounds this morning. So far, it's been able to lose 5.62 pounds. That's off 14% to the downside. Tesla Motors off $5 and change. Oshkosh, by gosh, they're down 10% off $5 and change. A call number 877-927-6648. Let's peek in on some of these stocks here to the downside. Let's start off with the big knocker. That is Atlas Air Worldwide, AAWW, not SSEE. Let me see if I can get my fingers on the right keys on this keyboard. That would make it easy. AAWW. There we go. So gapping down with some volume. Okay, so this is coming back into a breakout area. It's not exactly the way you like to see a stock come back into a breakout area. So we can, and then I take it back even further. Man, I don't know what that volume day is on February 28th, but we're going to ignore that at this moment. So breaking a swing point. So the swing point out here was October the 9th. That had, a lightly traded stock, 161,000 shares, but gapping down below it with 120,000 shares already here this morning. That says, and this thing broke out here, coming off of the lows back on May 1st. It looks like that is where this stock is headed to, somewhere around the 36.61 to the 37.78 area. Coming back with volume. Let's pull this back even a little bit further out here. No. So I'd say that's at this stage, that's where this thing is headed. If it breaks that swing point, the next swing point to the downside will take you all the way back into 2011, October 2011, right around the $31 range out there. So right now, let's see, we've got the Dow's down 5 points. The S&P is up about $1. The composite up 24 cents. It's October 31st. Now, I don't know if any of you have done this study. I myself have not done this study. So let's go do this. Just for the heck of it, I'll grab a pad of paper. It's the end of the month, right? It's October 31st. I'm just curious what percentage of month-ending days, we talk about window dressing and so forth, right? Let's go over and take a look at the well, give me a moment here. Let's go over to index. I haven't done this study, so if you've done this study, you're welcome to chime in, give me a call. But let's go ahead and put up the S&P 500. I don't like this. I have had some problems with my computer this morning and was fortunate enough to get things back up and going before the show, and not looking good. Looks like Stevie's going to be making sure he's got a backup of everything today because something ain't right. and that is not good. You know what it's like. It doesn't matter if you do it. Look, having a backup is always a good thing, and but even when you do have a backup, that still can be quite a pain. Like even this thing, I can't get anything to really move the way that it needs to. So even though I want to do this test, man, oh man, what is? Well, I'm going to get off of that. Maybe it's just that. Maybe there's a problem just with inside that, inside this area here. So let me try to switch over. Okay, got a little bit more movement here in the S&P. So I'm just going to go back and we're going to take a look at each of the final trading days of the month. Let's just do our own little test. So now we've got to go back to what, September 30th or so. I don't know if it's September. So here's September 30th. There's a window dressing day. September, that was a quarter end as well. That ended in a down session. So September, just write that here. So September was down. And because we always talk about, or, folks talk about, hey, it's window dressing. And well, let's go back and take a look. Let's go to August. So in August, it was the 30th. And August 30th, that was a little bit of a down day. Nothing major. But in August, it was a down session. That's interesting. Probably nobody, if nobody's done this, they didn't expect the first two that I would move down to, especially with the bull market that we've been in, would actually be down days. Now let's go take a look at July out here. So July was the 31st, and July 31st was a sideways to down, but it certainly wasn't a update out there, up day. So we got sideways to down. Interesting, huh? Let's go take a look here at June. Let's come into June. The last trading session in June was the 28th. Now, that's interesting. That was actually a down day. Folks, is anybody out there would have thought that just the first four? Now, that doesn't make a very good sample size out here, but that is not what my expectation was. That's why you go. That's why you actually go do the work, right? Forget your expectations. Just actually spend a little time to do the work. So I thought it'd be interesting to do that. May 31st. How about this? May 31st, a down day. That's blowing my mind out here as we talk about things like window dressing. So we're in the strongest bull market run that we have been in since March lows out, March 2009, by the way. Now let's go take a look at April 30th. April 30th. There we go. We got our first minor up, but it's still up, right? So in April, April, we'll put a slightly up day out there. And I don't know that this matters out here, but it matters to me. I said, well, why not? Why not go take a look at it? Let's take a look at March, what the 28th ends up being. And that's just a slightly up day too, March. So slightly up in March 2013. Let's check out February out here. February 29th or February 28th. February 28th was a sideways day out there. So in February, it's sideways. Interesting. Very interesting out here. January 31st is a down day out here. So we're now into we've had 9 months out here, and the last day of the year, not last day of the year, last day of the month, and the so-called window dressing out there. Doesn't look like there's a lot of dressing that is actually done on the last trading session of the month out there. Anyways, I don't know what that means, but I can tell you that my expectation was not what I actually saw as a result. So maybe what you want to do is go back a little bit further out there. I'm not saying that it's a trading pattern, but I will say Schultze would say very, very interesting. Of course, that's not exactly the dialect that he used out there, but you guys know what I mean. In any event, let's get back to these markets out here, and not that we really ever left them. But let's take a look at silver and gold. Let's go see what we've got going on out inside silver and gold land out here. Silver, let's look at this. We see a little bit of pressure this morning, perhaps caused by the U.S. dollar index, maybe something else, I don't know. But as we do take a look at the silver, we can see that price here this morning made it down to the bottom of the rising price channel. And I would say a break of that area to the downside. Here you had this little subcorrection channel that was in place coming off of the highs back in August. We broke out of that on the trading session of October the 18th out there. So silver here coming back and testing it. It would not be very bullish to come back and break the bottom of that price channel. It has not tested the most recent swing point. That swing point inside silver is October the 15th out there. Let's take a look at Goldilocks. Let's see what gold is doing out here. Gold trading out at 1325.70, and you know what? In my opinion, what we want to see is let me go over to a different gold chart here. The 39-day exponential moving average is that's a Fibonacci number, by the way, and it is a pretty darn good right now with regard to this pullback here. It could offer a buying point if, in fact, it were to hold, which is right around 1328, 1329. I'd say 1329.50 is what we want to see gold hold in order to really remain bullish. At 13, where it's at right now, all of a sudden you have to get a little bit neutral with regard to the breakout that we recently saw here. Now, what gold looks like it is doing is maybe testing that breakout high. That was October the 17th. That breakout high was pretty important, 1324.20 out there. And so far, the trading session, we've seen 1322.10 as the low. You're trading at 1325. So a good volume on that trading session was 165,000 contracts. You're about half of that as we speak here right now. Now, speaking of breakouts here, if we go take a look at Goldilocks, it's a good reason to take a look at a number of different charts that are. Now, you can clearly see that gold had broken its downtrend channel that it was traveling in. So off of those highs, if I go back to the daily chart out here, I'll do that for you. Let's first go back to the daily chart. So as you see, the daily high that before gold went ahead and reversed, that's back on August the 28th. Now I'm going to go down to a shorter-term time frame chart, 120-minute chart out here, and you can see that the highs of here, August the 28th. And eventually what happens, is gold actually goes ahead and and it starts traveling in this descending price channel out here, right? You can see it, even the wide-ranging bar that we saw gold. This was Uncle Ben Bernanke Day, September 18th. Still wasn't able to close on the following trading sessions outside of that. Now, we see a nice little price relative strength divergent pattern down here. We see a lower low with a bullish, couple of bullish candles out here. With a higher relative strength out there. There's a nice divergent pattern that maybe we're going to see at least a test of the highs. Well, in the case of Goldilocks, it wasn't a test of a high. It was truly a breakout session at 4 o'clock in the morning. And that was on October the 17th out there. So that was your breakaway. And at this stage here, if we take a look at the retracement from the actual low to the high that has been put in on the 120-minute chart, you'll see so far the pullback, I guess, not too bad, because you're back at about the 0.382 retracement level, 1321. But if that area fails, 1295 is written all over it. 877-927-6648. Pretty flat market out here. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The Dow down 17 right now. Composite is off 11. Russell 2000 down a couple of points out here. We've got net declining issues as we speak right now. They're minus 2.7. Well, net declining issues is not minus, right? Net declining issues, a total of 286. All that is needed today in order for the bears to take control of the market is 232. And, you know, we did that segment there where we took a look at the last day of the trading month where my expectation would have been that they would have been mostly up days, and that is not exactly what we found out. In fact, that is not what we found out there. I did miss a caller out there. Oh, we do have Jesse is back. Jesse, thanks for calling back from Omaha, Nebraska. Thanks for calling. Yeah. How are you doing today?
I'm doing good. I was wondering if you see a Garley on CLI on the daily.
CLR or CLI?
Yeah, CLI. It's a realty company.
Continental Resources.
No, CLI.
Ah, CLI. Okay, because I got the wrong chart up there. Okay.
Charlie on daily.
All righty. CLI is the ticker symbol. So now you're looking at a Gartley buy pattern?
I don't know if it's a buy or sell. That's why I called you.
So I just want to make sure I got the ticker symbol here. C as in Charlie, L as in Larry, I as in India, correct?
Yeah.
Okay, so no, I don't see a Gartley pattern out here. Right now it's trading at $20.56 out here. And this is really just trading down at its coming back into a swing point from on the daily chart we're looking at from September the 18th, and that low is $20.60. You're down below it. That's got volume of 1.4 million shares out here. So I don't see a Gartley buy pattern out there. It looks like we might have lost Jesse, or I've got something going on in my ear. In any amount, what I'll do here is thanks, I appreciate that, Al. Is for Jesse, we'll try to. I don't know, see if I can find a Gartley pattern set up inside of this equity just real quickly as I look at it. Where is the last Gartley pattern inside here? So we're looking for an A to B equals C. I'd say it's right here. Let's go take a look at this here. So our A point on this is July 6th, a B point right up here, maybe about August the 4th. And here is your D point, a retracement down right about here. And at this stage, here's your Gartley sell pattern that forms. You can see it gives you a price projection of 35.67. Actually hits right about here at its highs on April the 28th. If we go take a look at this, I'll try to draw this pattern in here. Here is what a Gartley pattern would look like. A Gartley pattern needs, Jesse, everybody else out there, a Gartley pattern needs an A to B equals CD. The 1-to-1 A to B equals CD. Price projection was 35.67. Got up to 35.96 out there. I'm going to get rid of the formation tool here for you so you can take a look at that. And then the real key here is you look for a bearish reversal signal. And in this case here, that bearish reversal signal, you got a nice big bearish engulfing, also a key reversal trading session, and that was on April 28th out there, April 28, 2011. Remember, the ultimate outcome of any Gartley pattern is that that D point actually turns into the C point of a larger A to B equals CD down, and that's, in fact, exactly what CLI did out there. And speak about key reversal sessions, well, we got them all over the place yesterday. So during the Money Masters show, we'll take a look at those, all the reasons that if you are long, and you know I've been talking about how this is the strongest bull market that we've had since March 2009. We're in for a bit of a pullback here. Whether it's going to be more than just a pullback, only time will tell. But, folks, it is Terrific Tuesday. Have a happy Halloween if you're starting your Thursday. I'm sorry, it's Thursday out there. And if not, we'll see you just in a few minutes. And have a great Halloween. Have a great Thursday. Look forward to seeing you soon. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.